Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe, the Christmas Eve edition. It's Tuesday, the 24th of December. Starting off with the FTSE 100, which looks like it's successfully bounced off the floor of that rising trend channel from September last year. Nominally 80.70, the floor of the channel. Above that, we were looking for the market to at least head back up to the 200-day line. 81.80, best case, I suppose, at the moment is we hit that December resistance line around 82.70 by the end of this month. RSI still well below neutral 50, but bounced well at the oversold 30 level intraday on that 8,000 dip that we, 8,002 dip that we had last week. Moving along to the DAX, and here we've had quite colourful price action in the sense that we had this market with the bull trap through the record highs, and then the gap down, two gaps down after that. Still got the prospect of support coming in 19,500 at the 50-day line, or the worst case would be 19,300. But at the moment, looks as though we found some stability at the old resistance from October in that 19,600 zone. Moving on to the Dow, and here you can see that made basically a comeback after bouncing off the floor of that gap there that we had back in November, so normally 42,300. Above that, looking for the 50-day line, hopefully by the end of the year, over the next week or so, 43,500, the zone there. But I suppose at the moment, we'd be happy with that as an end-of-year target. RSI bounced off neutral 50, and obviously that is what we've got the benefit of in the last couple of sessions. Moving on to Bitcoin, which has slightly got the wind out of its sails at the moment, but at least we're clinging on to the 50-day line there, 93,500. Worst case is that we've got to have a further rug pull down to 85,000, which was support on the way up back in November. We might get away with it and head back towards the 100,000 level over the next few sessions if we can recover the neutral 50 RSI level and stay above or around at least the 50-day line. Moving on to gold, and here we've also bounced off the floor of the channel. In this case, it's one that's been in place since February. The level there, 2640, which is almost exactly where we are at the moment. We'd like to see an end-of-day close back above the 50-day line there, 2685, to take us back to the top of the range at 2750. But this consolidation between 26 and 2750 might last quite a while, especially given the latest RSI failure below neutral 50. Moving on to the stocks, and starting off with the Aquas market, and stock which has had a decent year on many fronts, and got Ananda developments, and which I think is soon to be Ananda Pharma. Here you can see that we're in the run-up to a golden cross, top of the rising trend channel there, 0.56, which is basically the high of the year, looking for that perhaps as soon as the end of January, while we remain above the late November resistance there at 0.37 on a mid-close basis. But run up to the golden cross, always a good time, or normally a good time for a stock or market. Moving on to Avacta, and we've had another go, we're having another go at breaking the 50-day line. As you can see, in the recent past, the either the 50 or the 200-day lines have been the block on the share price. So the 200-day line there back in September, the black line there, and the 50-day line in October. It was just a combination of the two again, and this time, though, we've got the 50-day line on its own around 50 pence. Want to see an end-of-day close above that to give us a move up to the 200-day line at 54 pence. But I suppose the main relief here is that we once again found support above the 40 pence level. RSI's bounced at neutral 50, so that suggests maybe this rally will be rather better than November's one, and we could head up towards the mid-50s. Best case now would be up to that resistance line there from July, just shy of 60 pence by the end of next month. Moving on to Ascent, rather, and here we've got a situation where there's been a bit of CEO buying, obviously the man believing his own hype and pushing the shares through the 200-day line at 1.9 pence. Above that, we're looking for a best case scenario target as high as 3.4 pence by the end of next month. enjoying this unfilled gap to the upside and pushed ahead of Friday's news as well as the bullish divergence. So it looks like as though Ascent may be back in business for the first time in a long time. Next up is Atlantic Lithium, and here lots of blue candles near the low, which is quite encouraging, as was the gap to the upside that we had earlier in the month. The view at the moment is that above the November resistance of 14 pence, we're looking for 18 or 19 pence by the end of next month. There is a lot of resistance, though, between 16 and 20 pence in the form of the 200-day line, a resistance line from May, and old support there from back in July. But at least while we're above that November resistance, feeling positive about the shares. Onto a stock which I haven't looked up quite a while, which is Aferian, and here unfilled gap to the upside, a bit like the Ascent chart, and rising above a rising 50-day line, so that's also encouraging. The main block here, the 200-day line at 5.2 pence, above that looking for 9 pence, perhaps as soon as the end of February. Could even be by the end of next month, but the end of February is what we're giving it up to. On to a stock which is making another appearance now after not being heard of at all before, which is Bay Capital. Here we're fast approaching our first target there at 8.25 pence. Above that, now looking for as high as 12.75 pence, the upper parallel of the top of that triangle. So a vertical move here looking very encouraging. Onto a company which delivered a good RNS today with contract win, and here gapping towards the 50-day line and recent resistance around 182, let's call it. Above that, we could probably see the shares head for the next level up as high as £2.26, which was resistance on the way down. But probably initial target there, one trying to be cautious around the 190s, but ideally up to the 220s by the end of next month. Ideally, there's no end of day close back below recent resistance at 170. Moving on to Parkmead, and here you can see that shares also gapping up off the lows, in fact, for the second time now, and bouncing effectively off the top of the gap there, the second gap at 17.8 pence. The view now is that we could see the shares at least retest the recent resistance there at 24 pence over the next 2 to 4 weeks. Ideally, we stay above 17. Moving on to Renalytix, which is quietly recovered over the recent past, in fact enough to hit our first target there at 10 pence. Above that, we're looking for 12.5 pence early in January. In that situation, looking very bullish indeed. We haven't had a red candle there since the beginning of the month, so very impressive. On to Tiger Royalties, which announced its big transformational deal last week. Current situation is that we're actually making a new leg to the upside. The target here was up to 0.28 while we were above the 200-day line at 0.16, so that is looking as though that could happen. Big move again for Valereum, and here you can see that shares breaking out of the, blowing the doors off that rising trend channel that was previously drawn for them. The next level up would be the upper parallel of that rising trend channel, as high as 21 pence by the end of this month. Obviously, only a few sessions to go, and we'd have to update the target there, but that one looks like it's really on the move at the moment. Only back below the latest gap at 16.5 pence, really delaying the upside scenario. Another stock which has done what we wanted it to do is Vinanz, and not surprisingly, is given that it's announced today it's going to the main market of the London Stock Exchange, and here you can see that we've had our rising trend channel there, top of the channel there as high as 22 pence, and looking for that by the end of next month while we remain above the floor of the channel and the 50-day moving average at 14 pence. Just to show the charting works now and again, we've got good news from Windward, where we had a rising trend channel there pointing to £1.80. In fact, the deal today has taken it through the top of the channel, so the second stock in a row, really. We're blowing the lights out, and the idea now is that we just enjoy the vista of that move, that bounce off the rising trend channel there and above a rising 200-day moving average. Onto the wonderfully named Windar Photonics, and here another stock which is delivering on the charting message, golden cross already last week, and looking for the shares to hit 65 pence over the next few sessions, obviously interrupted by the holidays. Finishing off with Zenith Energy, which also had a decent announcement last week, and you can see that shares rising vertically at the moment. The first target there was 2.3 pence, second one up to 3.9 pence now, and we're looking for that over the next few sessions. And I suppose at that point we'll be looking for a higher target, which has to be worked out. Ideally, we stay on the right side of resistance on the way down at 2 3/4 pence, but that looks quite likely. That's it for me today. More updates after the Christmas break.